Evening, everyone. Thank you for joining us. I see the participants streaming in. We'll go to the questions in a short while. Let's give it a few minutes so that more people can join us. And in the meantime, let me show you some pictures. Yeah, these are latest photos from some of our projects. Some of the projects that were funded by people like you, by the crowd from around the world. This is called Salam Citayam. It's in Indonesia, of course. All our projects are in Indonesia. Most of them are close to Jakarta, around Jakarta. Many of them in industrial areas. So you can see here, they are small houses. And these houses are occupied by low-income families. Each family typically earns about 300 to 500. I mean, each household earns less than 500 US dollars a month. Yeah, typically about 300 to 400 is the average. Two adults usually working. This is another housing estate that's also developed by the project owners that we funded. This is a different project called Kampung Islami. You can see an aerial shot here. There's about 200 houses close to an industrial area. Right? You can see at the corner here a mosque that is being developed, and by the side there's actually another new project that was recently funded. This particular project was funded about 2 years ago, and you can see it's already occupied. Right? These are some of the local residents, the children, who came to meet us when we visited them to take some photos. And this is again Kampung Islami, right? So for these people in Indonesia, compared to their previous circumstance where they basically do not have houses, they would rent, they would stay in the houses of other people, wherever they can find. Usually they'll stay in a room, a whole family in a room. So now here with a house, they actually have an asset. They have a lot of stability. We just finished a university report last week. There was a university from Malaysia that flew down, that had their students fly down to measure and track the social impact of our projects. And we will share some of that findings in the near future. This is early stage, another project that's early stage. I'll skip this. This is a slightly nicer project. The price of these houses are a little bit higher. The ones that you saw earlier, subsidized houses, they cost about $7,000 or $8,000 or $9,000 US dollars. In Singapore dollars, about 11,000, 12,000, and this one will be about $15,000 to $18,000. Yeah. Okay, here's another one. Typically, when they are simple and small like this is the subsidized housing, right? And this one will cost, as I mentioned earlier, about 10,000 to 12,000 Singapore dollars. Yeah. So you can see all these photos of all these houses, and this really makes a big difference in the lives of these people. And there's a huge backlog in Indonesia of more than 10 million. What's really happening in the real world. Okay, hold on, some technical error. Okay. Okay, brilliant. All right, so we'll start the webinar proper. Thank you again for joining us. I was just showing you some pictures, and later if we have time, I'll show you more pictures of some of the projects that have been funded by the crowd, by people like you, and the residents and the families that have been impacted or have benefited from those houses all the way in Indonesia. We'll jump to the questions. We have 10 questions every month. We encourage you to send as many questions as you can, as you want, as you have, so that we can respond to them and so that we can share information with you so you understand what we do and how we do it and how you can and should get involved in investing in our projects. Right. So here's one question. Early on, I was showing you pictures of our housing projects. And this question does not talk about our housing projects. It's a specific question about entrepreneurship. The simple answer to this is for our Indonesian project, our Indonesian platform, Ethis Indonesia, which is the main investment or only investment platform that's currently operating and has been operating for some time. We only fund housing projects in Indonesia. Occasionally, we do other projects in Indonesia, but typically they are property or construction related projects, right? So in this case, Ethis Indonesia would not be funding new businesses or startups or even mature businesses and SMEs, right? But with that said, we do have a new platform that's going to be launched in Malaysia called Ethis Malaysia, and that is an equity crowdfunding licensed platform in Malaysia, and that platform may also take up projects outside of property. I mean, it will, but it may also take up some startup projects that will happen early next year in January, right? So in Malaysia, we have a wider scope, a wider coverage of business, property, and also startups. Although bulk of our projects will, of the campaigns that we feature will be for project financing, where we still have a defined exit strategy or completion of the project. Whereas for entrepreneurship projects, we may have a few, although we will be quite selective, because at the end of the day, these are definitely higher risk projects, and we thus prefer to have property projects, because as I'll share later on, you have some collateral and some assets backing your investment, right? And since Indonesia is the main and only platform that is operating and has been operating, and that's where we developed our track record and our credibility in the market. So today, most of the focus, or 90, maybe 95% of the focus, will be on the Indonesian housing projects. Okay, great. I love this type of questions. And definitely, yes, we have had investments from 60 different countries, which is quite amazing. We did not realize it until we counted it, that there's so many different nationalities or residents from so many different countries who have invested in our Indonesian projects. And it's quite amazing because most, or I would say the bulk of them, of the investors, and probably you, have not been to Indonesia or been to the projects definitely. And this is pure online investment through the platform to Indonesia. Increasingly, there's more and more awareness about Indonesia as a good market, as an attractive market for investment. It is attracting a lot of investments from around the world, especially from institutions today. I just came back from a few trips to the Middle East. I went to Bahrain, and then I went to Dubai. Both we were invited for events. Yeah, we get invited quite regularly for events because of the work that we do and because of your support, which makes us what we are. And in those countries, in those cities, I met up with very strategic investors and institutional investors to discuss about the possibility of them investing. And it is a very pleasant surprise that the level of understanding and awareness about Indonesia is at its, I would say, its all-time highest right now. Yeah, a few years ago when we started, people had no interest, or they were not even didn't have Indonesia on their radar. And today, people recognize that Indonesia is a great emerging market to invest in. And that's what we provide to you. You can invest small amounts from anywhere in the world. Of course, you can also invest large amounts. Yeah, we give you that flexibility. Next question, how do we screen potential projects and how credible are the developers? All right, so on the platform, you can actually see some of our screening criteria. You can check it out on your own on ethis.co/ID, or just go to ethis.co and click on Indonesia. And there you can navigate the different content pages that we have that will share with you how we screen projects. I will give you a summary, but it's probably better for you to read through it on your own. Here's the summary. Basically, what we do, I'll jump to the second question, jump back to the first half of the question. So how credible are the developers? I think that has a lot to do with where they come from, right? How do we originate, or how do we find these developers? Now in Indonesia, it's a huge country. There are thousands of developers. The population of Indonesia, in case you're not aware, is estimated to be today at 260 or 270 million people and growing. Yeah, so there are thousands of developers. There are 10 million houses that need to be built for this segment. So how do we find these developers? Well, basically, they come to us, or they are referred to us. They're introduced to us by three sources. One is directly to us through our platform. As more and more developers know about us, as the Indonesia social housing ecosystem really knows about us, people come to us directly. But our preferred developers actually come through other parties. Firstly, banks in Indonesia. The banks in Indonesia, they provide mortgages or home financing, conventional and Islamic, to the buyers, right? Our projects are technically sold to Islamic banks, right? The units that you fund are sold to Islamic banks, who then resell them to the end buyers through a government subsidized program for the subsidized houses. So banks provide the mortgage. In this sector, typically banks do not provide too much construction finance. So developers are always looking for support for the cash flow so that they can develop more houses faster. Because in this market, it's about volume, right? The margins are not as large as when developers are doing middle or high-end properties. When they do low-end properties, which is what we are focused on, the margins are smaller, but they do volume, right? And they try and do it as fast as they can so that they can do more cycles with their capital. So that's why there's a large demand for funds. And the banks want to provide the mortgage. So the banks will recommend and refer their best clients, who are the developers, to us. And then we screen those projects, and potentially if they pass through our internal screening, our screening criteria, then they're featured on the platform for you to decide whether and how much and when you want to invest, right? So how do we screen the potential projects? Well, essentially, we look at the fundamentals. Firstly, we make sure that for the housing projects, especially, that there is asset backing that project, or there's collateral backing that project. And typically, the collateral would be higher than the capital or the investment amount from you, from the crowd, right? So for example, we are funding a $2 million or $1 million project, and the collateral would be 1.3 or 1.5 million, more than the value of the capital, right? This is to protect against the worst case scenario, the really worst case scenario in property development, if there is a default, which hopefully won't happen. But if there is one, then we have assets that we can seize, or assets that we can try to recover. Yeah, and typically we don't even need to go to that extent, because there would be some funds left that have not been disbursed usually, and so then that funds can be utilized to complete the project. Yeah. So first is we make sure there's clear unencumbered collateral, a collateral that's clean, collateral that we can seize in the worst case scenario, right? So that's just to cover the very worst case baseline outcome. That that can always happen to any project, but of course the occurrence is quite low. Now, what else do? We screen to make sure that the units, firstly, the developers have good track record. Yes, so when the banks refer to us, it is usually very, very strong developers. And secondly, we also check on the market or the demand. Yeah, typically a number of units are already sold at an early stage. So that gives a strong indication on the marketability or sellability of the projects. We also make sure that the financing bank is in place supporting the projects, so the exit is also defined, right? So that's one source from the bank, and typically from the bank, all of these things are very easy to check because the bank is already there. Now, another source that we have, which is a much, I would say, a larger source and a more exciting source, is actually through developer associations or groups. We have signed agreements with 4 large developer groups that collectively have more than 1,000 developers. So what these groups will do is they will screen and vet, pre-vet before it comes to us, and then they will recommend their members' projects to Ethis, before Ethis to do a second level screening before we put it on the platform for you to look at and for you to decide to make your investment. So that is our second source, right? So I mentioned at the beginning, we have 3 sources. One is direct to our platform, secondly is from the bank, and thirdly is from the developer associations in Indonesia that we work with. And similarly, we look at those criteria. We make sure there's collateral, we make sure there's a demand, we make sure there's a financing bank, and depending on the stage of the project, we make sure also that the relevant permits are in place. Right? So these are the basic important fundamental criteria that we check and we analyze. And then from there, we curate and collect this information, we verify this information together with the project owners or the developers, and it's presented to you for you to decide to invest in these projects on your own. Question 4, how are risks and profits shared between property developers and investors? Right. Essentially, we have 2 types or 2 forms of investments or structures that we utilize. One is construction financing, which in Islamic finance is termed as istisna. So essentially, what you do as the crowd is you come together, all of you pool your money, we facilitate that, we organize that through the platform, and then that money goes into buying units that are not yet completed. All right. So we buy units at an earlier stage before they're completed, obviously at a discount, and then those units are later on sold to the bank, and from the bank it's sold through a mortgage through the end buyer, right? So in this kind of projects, typically the risk is, and the second type of project as well, the risk is typically delays. I'll talk more about that later on. Let me finish on the structures. So the first structure is istisna, or construction financing. So here, when we raise, for example, $500,000 to invest or to purchase, let's say 20 units of houses, right? Then what happens is that this money is disbursed to the project in phases or in stages, depending on the progress of the houses, right? Typically 3, sometimes 4 stages. And the last payout is given to complete the project when or the houses or the units at the advanced stage of construction. And once that's done, the houses are then sold to the banks, and the exit mechanism kicks in, where the revenue goes out, and from there profits are realized and distributed to the crowd. All right, I'll touch on the risk later on. The second kind of structure that we do is a joint venture structure, where the crowd, where you pool funds, invest together into a partnership with a joint venture with the developer, right? So in this case, it is structured as a joint venture, and there's a certain level of ownership that's assigned to the crowd, and from there the developer does the work, and at a certain milestone or a certain point, it can be at an early stage, right? For example, sometimes the developer has financing, or they have cash flow coming in once they have started constructing a few units, for example, or once they have received a few permits, for example, right? So this is where we come in to help them reach that point. And when they reach that point, there's a sum of money that comes into the project. There's revenue that comes into the project, typically from the bank or from sales. And then from there can be an exit, right? So depends. It really depends on the exact project, but these are the two structures. If I can generalize, one is construction financing, and the other one is joint venture. Now, in both cases, there is a sharing of profits, or there's profits that's made in trading or in buying and selling of the houses. The first scenario, the buy price that we come in at and the sell price that is fixed by the government is known, and thus the margin is also known. The amount of profits is also known. Similarly, for the joint venture, typically there's very little variation, and the amount of profits that's realized at the end of the day tends to be exactly what was estimated at the beginning, because the cost of the project is always quite standard. In this kind of housing, it is mass production, right? It's like a factory. It's not where you build one building and then you build a second building and the cost becomes different. Here you build many small houses at one time. So it's mass production. The costs are quite similar, and the selling price, as always, is already fixed upfront. So the profits are known, right? So what's the risk? Now, I mentioned earlier on, the worst case scenario is project failure. This is where something terribly bad happens to the developer, and the developer, let's say, closes down. Right? This is really worst case scenario. And if that happens, then the collateral will have to be recovered and liquidated, or if there's sufficient funds, the project continued with other contractors who will be roped in and paid with that money until the project is completed and sold. Right? In either case, there would be an extension of time. Definitely, it will take time to recover the project. Now, that is the worst case scenario. It has happened once in our projects a long time ago, about 2 years ago, and we managed to recover the entire project, and there was sufficient cash flow in the project actually to continue and complete the project, and that was the picture that I shared earlier with some of you. All right. Now, when it comes to the more common risk that all of you need to consider and be prepared for in any property or construction project anywhere in the world, not least Indonesia, there can be delays, because this is a real world activity which involves people, which involves contractors, which involves governments, permits, buyers, banks, and also nature. Right? Sometimes, for example, in this period, the end of the year, in this part of the world is the monsoon season where there's heavy rains, and that can also affect work on the ground. So these are all many different factors which can result in delays, right? So the main risk that you have to consider or be aware of before you invest is the risk of delay. And this is something that you need to keep in mind. Thus, when you invest, you must make sure that the capital that you put in is capital that you can live without, right? For example, you see a project is 2 years or it's 1.5 years on our platform, and you want to invest. Then don't invest with the expectation that you'll get the money back exactly on time, because it does happen where there are delays and overruns. However, I must share that we have factored in a buffer, right? All our project developers, we discuss with them and we factor in a buffer for common usual delays, right? Nothing is perfect in the real world, so there is a buffer already put in, but sometimes it goes beyond that buffer. So always be aware and be careful, and give yourself an additional buffer. Don't be dependent on this capital that you put in, because at the end of the day, you're investing in the real world, and you have to wait for the real world project to materialize and complete before you can get your returns, right? It's not a fund or bank where you can withdraw money at certain intervals or at certain points in time, right? At this point, you're investing in the project, okay? So for the property developer, they share in the risk and the profits with you in exactly the same way as what I shared earlier. Because for them, their interest is aligned with the crowd or with the investors, because it's all about speed. The faster they complete the project and the faster they can pay back the investors, the faster they can get, that means the faster they have gotten the payment from the bank, and then they can continue to build more houses after that. with or without additional investment from the crowd, right? So this is how the risks and profits are shared. We are in it together, especially for the joint venture model, right? Before I move on to the next slide, I want to reiterate that at the end of the day, the reason why a lot of investors, especially big investors and institutions, always have an exposure or investment in property or real estate is because there's asset backing. When you invest in businesses or stocks and shares or something even more speculative like crypto assets or cryptocurrency, usually there is no downside protection. You can lose all your money. When it comes to property, the challenge or the risk is mainly delays because you have real world fixed assets. In Indonesia, in this segment, there is no speculation. These are people who are looking for houses to live in, right? Because they are poor people, there's no speculation at that level, and it's controlled by the government in terms of the pricing and who can buy and all those different things, right? Okay, let me move on to question 5. I want to try and save some time at the end for any questions you may have. So save your questions. You can start asking them as we go, and later on I'll look at the questions. Has the actual return on the project turned out to be more than the expected return, and what happens then? All right, if this happens, then if it's based on the joint venture approach or the musyarakah approach, then the crowd or the investor will get more. Now, if the buying and selling or istisna approach, the buy and sell price is known from before, so typically it does not turn out to be higher. However, I want to share that a lot of investors think of their investment on a per annum basis or an annual calculation. On our side, or on the project side, it is based on the entire project, right? So let me give you an illustration. A 2-year project may have a targeted return of 26% or 28%, right? So based on buying and selling, the return in 2 years is 28%. However, if that project, and in that case, if you calculate, it works out to, divide by 2, 14% returns per annum or per year, right? Now, if the project completes earlier, the profit will still be 28%. It will still be the same. So if it completes in, for example, 1.5 years, 28% divided by 1.5, if my math is correct, it's about 80%. Okay, I'm not sure whether that's correct, but it's going to be higher, basically. So that's where your returns are tagged to the project. It's not tagged to periods of time, right? So to answer this question, yes, if things turn out better than expected, then you will benefit as well. Was there any undue delay in handing over the finished homes and thereby delaying payments to investors? Yeah, so I did touch on this earlier. There have been delays and there will always be a risk of delays in property projects. This I must stress on again. Our job as a platform is to give you the information you need so that you can make an investment. All right, so let's do some more numbers. If you do a 1-year project and the projected returns are 15%, if the project delays by an additional 6 months, right, then you still get 15%, but over 18 months. So if you do your calculations on an annualized calculation, you're getting about 12%, sorry, 10%. You're getting about 10%, right? So you need to decide whether you're okay with that. Is 10% is it still a good return? And then let's go one step further. You're supposed to get 15% in 1 year. What if the project is 2 years? What if it takes 2 years, right? For whatever reason, it delays by double the time. Now you're getting 7.5% on an annual calculation, right? 15% divided by 2 years because the profit is the same, but the time frame is double. So you get 7.5%. Now I would say typically that is still a good return. Of course, it's not what we were hoping to get, but it's still a good return. 7.5% is not something that is easy to get. And even if you do get or you can get 7.5%, usually there is no asset backing, meaning there is no downside protection. That means you have a high risk of losing your capital, which is why you can get close to 10%. Right? That's how the world works today. And so going back to my earlier point, property investment protects your capital because there's asset. Right? In the worst case scenario, you just need more time to recover the asset to get back your capital. So that part is clear, that part is known. Yeah? What we're looking at now is the returns. So if there's a delay, your return is your profit that you get is still the same, but over a prolonged period of time. And if you feel that that is still attractive to you, then you should definitely invest in these property development projects, right? But if you have a very, very strict threshold that I must make 15% in 18 months, in 12 months, or I must make 28% in 24 months, and I cannot afford for this to dip a little bit, then this is not the investment for you, right? Then you'll have to look at other avenues that you can find. And if you do, please let me know, because today's market is a little bit tough to get, very high returns of 10% or above. What is your definition of project completion? What do you mean? Do you mean when investors receive the returns? Okay, so project completion is when the projects are what you call it, completed in terms of the construction, right? So for most of the projects, especially the trading ones, the Ethis ones, where we buy and sell, this means that the units are completed. If it's the other kinds of projects where there are different types of milestones, that is when those milestones are reached or successfully accomplished. So in this case, it's about the project being completed. Once the project is completed, there is another step, which is the payment. And the payment comes usually or almost always from the bank or the mortgage bank or the financing bank or the bank partner. And in every project, we always ensure the bank is there. Is there a risk of additional or more time for processing that? Yes and no. Sometimes it's very fast. Yeah, it can be very smooth, but it can also be delayed. And typically, delays do occur if there are challenges between the bank and the buyers. Because you have to understand here, we're dealing with low-income families, and sometimes it's a bit difficult for them and the banks to coordinate. Right? They are busy working. They're busy, trying to feed their families, and they're not good with documentation. So that does result in delays sometimes. When is the ROI usually paid out? When is the profit usually paid out? And how do we receive it? Is it credited to bank account? Yeah. So following on to my earlier answer, once the project is completed, the payment is processed, right? Whatever the milestones may be, if it's completion of units or completion of certain milestones, then the funds will be processed typically by the bank, and the bank will then transfer the funds to the project, and a portion of that funds is typically pre-agreed with the bank to come to the crowd, right? Just recently, some of you may be aware, we got a formal approval from the regulators in Indonesia. Before this, the regulators were well aware of what we were doing, and they allowed us to operate. And it took us about 1.5 years of working closely with the regulators to come up with all the different guidelines and all the different precautions and all the different processes so that they can formally approve us. And that is done 2 months ago. So today we have this formal status in Indonesia, and that helps a lot in tying up with stakeholders, especially the financing banks. Yeah. So today, the banks and us and the projects that we fund, and us as a crowdfunding platform, we have a close relationship and we work together. The bank wants us and needs us to fund the project so that they can provide the mortgage, and we need them to do the payment at the end so that we get our revenue, or the project gets our revenue, and we can then pass on the profits to you. Yeah. So to answer this question again, it is transferred directly to your bank account, right? In your home country, you will need to inform us where to transfer it to, and based on that instruction, then from Indonesia, it will be transferred directly back to you. Yeah. Sometimes investors want to reinvest, and then we have another mechanism that will kick in for you to recycle those funds to invest again. And typically, a lot of the investors, we are aware, come in with the intention to reinvest because it may not make sense to keep moving money in and out of Indonesia. It should be rolled over and rolled over. Unless you need the money, then of course, at the end of any project cycle, you can withdraw it. Now, we are continuously working on our technology. We are building a new platform. It will take still another few more months, probably quarter 2 or quarter 3 latest next year. And this new platform should be able to have much more features to make it easier for you to track and to reinvest. Yeah, so that is something that's coming up, and it's something we're intensively working on. But in the meantime, this is how it's done, and we routinely do this whenever there's payouts. So investors typically choose to reinvest. At the end of the day, it's your choice, and we are happy to facilitate sending the money directly to your account if you decide that you want to exit. All right. Can I view my investment asset performance 24/7 and profit figure? Right. So I want to touch on our dashboard, and as I mentioned earlier, we are developing a new system while maintaining and enhancing our system slightly over time. Our current system, we are in the background also building a new system. Now, the current system that we have in the dashboard, it is set up to provide you with updates on a monthly basis. So when you invest in any project, every month, we on the ground in Indonesia, our sister company over there, our team over there, will go to the project developers, will meet the project developers, and from there collect data from the project developers. On the ground, we also have an application that we've built to help facilitate this process, because in Indonesia, it's a wide, vast country. It takes time to travel. And at this point, we have close to 30 running projects. So our team is quite stretched in terms of going to every project every month. And some projects are quite far away. But the point is, we put in our effort to get an update for every project every month. Sometimes some developers are a little bit late, but most of the time, the projects come in on time, and you'll get it in your dashboard by the middle of the month. So that is our main focus, giving you updates, giving you reports, so that you can track the status and the progress and the performance of your projects, and so that you can anticipate, is it on time, is it delayed, or if it's delayed, did it catch up on the timeline? Yeah, so these are things that you can observe. We understand, and for us as well, it's very interesting because we get to be in the project, we get to see what's happening in the project. You have pictures, you have videos, you have drone videos. So that is the value that we provide to you as a platform. Now, in terms of the dashboard that shows you somewhat like your portfolio, now that aspect is not really there yet at this point. Yeah. If the project does get paid out, when it's paid out, you do see it on your dashboard. But basically on the dashboard, what you see is the reports and the updates. All right. Okay, here's the last question for today, and please feel free to ask as many questions as you want. I see a few questions coming in. So the first question here is not related directly to the projects, the property projects in Indonesia. This one is about fintech in general, and I'll be happy to provide my viewpoints on this. A little bit of background. I'm the president of the Islamic Fintech Alliance. It's a group of founders, about 10 of us from around the world. And I regularly get involved in events, conversations, discussions, roundtables, and meet my friends who are in this space. And of course, do a lot of reading up to keep myself updated. Right? And I wouldn't say I'm an expert in everything to do with fintech, but I have good exposure to it. So in terms of challenges and potential of fintech, it depends on which angle you look at. If you want to invest in fintech as an investor, if you're an angel investor or you work in a VC or PE firm, then I would say that there's a lot of potential for some verticals in fintech, especially those that we can see clearly the trend is still going up very rapidly. That includes crowdfunding. Essentially, that includes anything to do with investment and personal finance. Right? Insurance also is moving very fast. Fintech in the property sector is moving very fast. So are things like compliance. They call it RegTech. That's also booming and moving very fast. Some aspects of fintech may be challenging. For example, payments or wallets in some countries, because essentially there are too many players, and or there are large players who are dominating. I would say that in general, the big challenge to fintech, if you're looking at it from a startup perspective, is that now there's a thing called TechFin, where big technology companies, for example, the Ubers, the Airbnbs, in this part of the world, Grab, Careem in that part of the world, or Alibaba, Google, Facebook, Instagram, right? All these giants of tech. In China, there's many, I can't pronounce their names. Uh, these companies who were not traditionally fintech companies, they're not finance companies, they're now going to finance. So if Facebook wants to go into cryptocurrency, right? Certain Alibaba used to be e-commerce, now is doing payments. It's already one of the biggest payment companies in the world. So when these giants move into fintech, it becomes difficult for challengers or startups to compete with them. Yeah. So that's where I say the space of payments is becoming very, very tough. So if someone comes to you with a new idea to do a payment company, it's going to be really, really difficult for that person to make it because of the intense competition that's available in the market or that's happening in the market right now. In terms of potential, I would say this year, there's this, or this coming year, there's going to be a big trend in crypto tokens, right? Not cryptocurrencies, because that was a fad or there was a speculative bubble that came and went. This is where you have real world assets that's represented in digital form. And that is something that Ethis is also building up. We are developing it. And that's something that you can look forward to later on. The market is still raw and new. There are some use cases already. And this coming year, we'll see a lot more coming up. So we are developing it as fast as we can, but at the same time, we're also observing how other people do it. Because when something new comes out, there will be a stage of correction and maturity before the market really understands what's happening. Yeah. So these are some of the challenges and potentials of fintech as an industry. If you look at it from a global perspective, one of the fastest growing fintech markets is Indonesia. Indonesia has right now more than 1,000 fintechs. It's growing so fast because the need is so high. In a huge country that is made up of thousands of islands, finance has always been a challenge because banks are not able to reach the masses. The infrastructure is too expensive. The cost of setting up branches is too expensive. And now everybody has a mobile phone. Everybody has data connectivity. So mobile banking, payments, wallets, crowdfunding, P2P, all these things are really, really booming in Indonesia. And the benefits are already being felt, as well as some challenges, because you have some fintechs that are also exploitative and just looking to make fast money. Yeah, we will see, I believe, a lot of growth in emerging markets, big emerging markets. For example, in Nigeria, in parts of Africa, in parts of the Middle East, in North Africa, potentially in Pakistan, Bangladesh, and in parts of South America as well. Yeah, so that's just my broad overview understanding of what's happening in the fintech space. All right. Okay, so that's about it for this segment of 10 questions. I'll now jump to the questions that you've asked and try and provide some answers. And from there, I will jump, in the last 5 minutes of today's session, I'll jump to what's available on our platform now for you to invest. Right? Okay, so there's a question here. Can we include our name as your visitor for coming Islamic Summit in Malaysia and to visit your office in December 17th? Oh, wow. Very specific question, not related to the rest of those who are online. We will get in touch with you, definitely. Our team is on hand. They will send you a direct message and we'll be happy to receive you in our office in Malaysia, in Kuala Lumpur. For everyone that's online, we love to meet our crowd. We love to meet you because we want to understand what you want and why you came on board. So if you're ever in Malaysia or Indonesia, in Kuala Lumpur or Jakarta, let us know. Come visit us and we'll be happy to host you. All right, next question. Strange question. Do you work with countries that move money through black market where there are some problems with the banking system due to war? Okay. anonymous person, right? Well, I think this is a difficult question to answer, but I'll answer in this way. In general, we do not and we cannot. Yeah, the way the global financial systems work is that you definitely need to be working with the white market or the legal market. We are regulated in Malaysia and Indonesia, and we have an approval in Dubai, and we're processing licenses and approvals in various other countries. And the reason we're doing that is so that we are fully legitimate and we are above board and we follow the guidelines and the parameters set by regulators and the government. And that's a very, very important point, because when we're trying to do good, when we're trying to circulate funds for good, we need to be able to say confidently that we are legal and we are proper. I understand maybe the angle here is that some countries have problems, they have war, and they need help as well. And I understand that. And we do try our best to see how we can do that. But right now, we are only able to focus on the markets where we are currently licensed in Malaysia and Indonesia. We have a charity platform called Global Sedekah that does channel funds to, I would say, conflict zones or some risky zones or countries with some geopolitical issues and wars and conflict. Yeah, so that's pure charity. So that's something that we can potentially look at. And when it comes to things like investment, fortunately or unfortunately, we only focus on countries that we are able to go in a proper way. And that's very important. We uphold high standards of compliance and governance, especially now that we have regulators looking at everything that we do. All right. So thank you for the questions. If there are any further questions, feel free to just ask directly. Yeah. And now what I'll do is I will jump to, let me get this. Okay. Let me jump to our platform. Yeah, so you can see it. All right, so this is our platform, ethis.co. You can view our platforms that are currently available, that are live. Indonesia is the only one that's fully active with projects for you to invest in, and the rest you can sign up. Global Sedekah, the charity platform, is also operating. It's all online. Very easy for you to do zakat or wakaf or sedekah or any form of charity. So these are the two that's available. Dubai and Malaysia will be coming up in the next few months. All right. So you can click on visit site. Yeah. And then you'll come to our site here. Sorry, I don't know why it's technical error. Yeah, this, okay, let me get out the full screen. Yeah, the full screen is not working. So here you go. All right. So when you go to our platform, this is what you'll see. Yeah, okay, it's working now. So this is what you'll see. You'll see some statistics, some information which we update frequently. And then you can view our projects and see what's available. Below are all the previous projects that we've done over the past few years. And I'll scroll back up. Right now we have two open projects, PPC and Essential Daru. PPC is more or less completed. I believe that by Monday or Tuesday, it would be funded. Yeah, typically at this stage, it gets funded very quickly. And then what's available now for you is actually a very exciting project called the Essential Daru. Okay, let me see whether I can go full screen for you. All right. So the Essential Daru, this project is in a very, very strategic location. That's one thing that I have to highlight. Right? It's in a very, very strategic location. It is about, I think, 80 meters, if I'm not wrong, from the train station. And that train station leads directly to the biggest wholesale or textile wholesale market in Indonesia called Tanah Abang. And this project, the developers have from the beginning worked with the management of that wholesale center or region, which has had tens of thousands of workers. Right? I believe more than 50,000 workers are working there. And so the demand from housing from there is very high. It's a captive market. There's huge interest for this project. And these are some of the key information, some of the points that you need to know, right? Something that I highlighted earlier, investment is backed by assets worth 200% of the amount that's invested, right? So the crowd is putting in this particular campaign, you are investing a total of $400,000, and the assets that we have is close to $900,000 to protect your capital. Right, there's 15 days to go, so do be fast. In the past few days, you've gotten a few bigger investors who are keen to take this up. It's 28 to 30%, right, a good return. The range of return is because of the amount. You can see slightly below here. If you invest $1,000 to $20,000, you're considered a retail investor. If you invest $20,000 to $100,000, you get higher profit. You go into a different basket, a different group of investors. And then you have another one called, two more called gold and platinum, where higher amounts of investments will give you slightly higher returns. So that works out to 28 to 30%. All right. So this is what the project that is available right now. If you're interested, just input the figure here, click invest, and our team will reach out to you and facilitate the process. Everything is online. You need to make the transfer from your bank to the project bank in Indonesia, and everything else is automated. You get your contracts online. You sign your contract. You get your contract signed online. You get everything online, and from there you just track the performance of your project. All right. So right now it's just land. This land here, there will be 500 houses built, and if you go to this page, you can see more information. Who's the developer? What's their track record, right? You can download the entire project fact sheet, which has all the information from the market to the country to the risks to the collaterals. Everything is all there, right? You can see more pictures in the gallery. You can see a short video here as well. And then there's a simple investment calculator, right? So if you're investing $20,000, then you will see the outcome below, right? If you're investing $10,000, this is what happens. You get your gross ROI. There's a brief explanation there. Ethis gets a small fee, right? There's an explanation there of how it works. This fee is right at the end. We don't take anything from you at the start. Yeah, we are fully aligned with ensuring that the project succeeds so that we also can get some fees. And this is your net ROI and your total payout. At the same time, from this $10,000 investment, you're actually helping to build 2.5 houses, which on average will help 10 low-income individuals, parents, children, siblings, to get a home. All right. So this is the campaign that's currently available. Just click invest, put in your figure and click invest, and then our team will reach out to you to facilitate your investment. All right. Let's see whether there are any other questions. Okay, there's one more question here. I would like you to touch on more on what are the real profit margins possible to achieve for investors in general in the world for investors, so investors can protect themselves from fraud. Oh, okay. So here the question is about the market in general. What kind of returns are realistic? All right. And what kind of returns are obvious frauds? Now, I'm no stranger to fraud. You know, in our space, a lot of fraudsters come to us as well. And in the papers, we're always looking at how, you know, sometimes people get cheated by scams. And we always feel, you know, really, I mean, I would say we feel hurt when we see people getting scammed, because sometimes it's so obvious to spot a scam. A scam typically is too good to be true. That is, you know, the one-liner that I can share with you. If anything seems too good to be true, then it's probably not true, right? I hope that's not what you think of us. What we have here on an annualized basis is 14-15%. which is very high, but is very high for the world standard. But for Indonesia, a country like Indonesia, is not that high. Yeah. In Indonesia, locals, when they invest in this kind of projects, or typically they'll invest in middle level or middle range projects, they expect higher returns than that. But we prefer, our platform prefers to feature projects in this sector because of two reasons. One is the social impact, and secondly, because the risks are lower. Right? Why is the risk lower? Because the demand is very high, the government is supporting it, and so on. Now, back to the question. So how do you spot a scam? I would say when the returns are too high. And what is too high? Anything above, I can benchmark it as 20%. Some in mature countries, in developed countries, 15% would be too high. In developing countries, 20% and above would be considered too high. Let me just look at the top investors globally, the top funds globally. It's very rare to find anyone making 20%. So it's highly unlikely for a small scale investment to make for you 20% or above. If it does, then it's a very, very risky investment. And if you have the appetite for that, then you can go for it. Right? So typically an investment that gives returns that are too high, if it gives daily returns, if it gives monthly returns, it's usually also highly unlikely. A good solid return would be in the range of 7 to 11% for a mature market, and anything 10 and above up to 15 or 16 in a developing country, right? The problem is a lot of people do not know how to enter developing countries. It's very difficult for them to understand what's going on, and that is the value that we provide here when we bring Indonesia to the world. All right. So we are out of time, but we suddenly have more questions. Oh no, these are the questions I already answered. All right, brilliant. So we are at the end of this session, exactly on the dot, on time. Check out the projects and let us know if they... Okay, there's one more question. Okay, let me finish this question. I have one Forex platform that promised 20% a month return. Does that sound right? Well, I think I already answered the question earlier. 20% a month is highly unlikely. If it's promised and guaranteed, it's even more unlikely. So I do not know this platform. I cannot say that they are definitely a fraud, but all the warning signs are there, right? So my advice is stay away. Now, I'm being very candid here. At the end of the day, of course, I want to share what's real and what's real that we have. And there may be other good options for you as well, right? Just not this 20% a month kind of nonsense. But what we do have and other people may have is close to 20% a year or 10% a year. Those are still good returns, and those are probably much higher chance of being real, right? So for Ethis, we've been around for some time. We've been around for 5 years now. We have licenses, we have track record, we have relationships, we have about 1,300 investments made, and increasing rapidly every month. So if you feel comfortable, it's time for you to take action and click in the invest button and let us know what you'd like to do so that we can help you to do it. All right, with that, thank you very much for your time and your attention, and hope to keep in touch and maybe one day meet up with you as well. All right, Assalamualaikum.